In the name of Allah, the most merciful, gracious, and compassionate, most welcome. Hope you fine and healthy. In the previous lecture, generally we have talked about the journal as well as the transactions that how can we record them in a journal. If you remember in the previous lecture, generally we have recorded the following transactions in journal. It was the previous lecture that we have recorded all these types of transactions in general journal. In today's lecture, we are also recording some of the transactions in journal. And I've come to the example, and this one is the first example, the first exercise of the transactions that we are recording them in journal. Guys, these are the transactions. Right now we are recording these kinds of transactions in general journal. Now come to the transactions. I will read the transactions one by one. Pay attention. Activity 1. Following are the transactions of Irfan Trading Company for the year 2020 October. The first transaction is Irfan started the business with cash Afghanis 80,000. So these are the transactions. So we are recording these kinds of transactions only in journal. If we come here, the required is journal, ledger, and trial balance. So firstly, we are recording all these kinds of transactions in journal. With the passage of time or in the next lectures, you will be posting them into ledger, and after that you will be preparing the trial balance. So now come to the first example. That one is Irfan started business with cash Afghanis 80,000. If you remember, we have discussed these things in the previous lecture. Generally, journal is consist of 5 columns. The first column is called by name of date, the second one is called by name of description, or you can say particular, or you can say illustration. The third column is called by name of reference, the next one is called by name of debit, and also credit. In the first column we can record, or we can write all the dates of the transactions. The second column, which is the most significant, we are recording all the illustration or the explanations of the transactions here. The next one is the reference column that we have explained in the previous lectures, and also we'll explain in the next lecture. When we are posting the transaction from journal into ledger, then we will also explain the reference. Debit and credit are the 2 columns that are also existed in general journal. We are recording the amount of the items here. In accounting, debit means the left side and credit means the right side, nothing else. Only these things, especially the debit and the credit, show the increase and decrease in a particular transaction. So the first transaction is Irfan started a business with cash Afghani 80,000 Afghanis. So here we can write in these columns we can write date. For example, the first one is on the first date. The first transaction is on the first date of the October. On the top of the journal we can write the name of the company as well as the year and also the month that we are recording the transactions in. That one is Irfan Trading Company. We can write these things on the top of the journal. On the top of the journal, Irfan Trading Company will be written on the top of the journal. Here you can write for the month of October 2020. That one is, we can also write general journal. That one is general journal. So now come to the record of the transaction on the first date of the October. We have a transaction that Irfan started business with cash 80,000 Afghanis. From one side we have received the amount 80,000 or 80,000 Afghanis from Irfan. From other side also we have started the investment. So here you can write as cash against, so cash against the capital, because we have received the capital for the investment. The amount of the money is 80,000 Afghanis as a debit, and also 80,000 Afghanis as a credit we have. So this is the first transaction that we have in our organization. Come to the second one. Purchased building for cash Afghani 36,000 Afghanis. Even 36,000. So now come here. We have purchased a building worth of 36,000, but it was for cash. So we have paid the money. Both of them are assets. From one side we have received the building. The building is assets of the organization. Here you can see that this is the second date of the October. From one side we have building. We have received a building against the cash, because it has been purchased by cash worth of 36,000 Afghanis, and also the money has been given against these things as cash. So this is the second transaction. Now come to the third one. Purchased machinery for cash Afghanis 10,000. The same transaction we have, but only in the second transaction we had the building, and here we have machinery. On 3rd of the October we have a transaction that we have purchased machinery, and we have paid cash. Cash is how much? 10,000 Afghanis. Here you can write 10,000 as a debit, and also 10,000 as a credit, because we have received the machinery and also we have paid the cash against receiving of the machinery. Now come to the third one. Bought computer on account from CR worth of Afghanis 2000. So here we have the transaction that is credit transaction. We have purchased the computer, but the money is not given to CR on the spot, but the money will be given to CR after a month, for example, or after 20 days. So from one side we have received a computer. It means we have purchased the computer, but we have not given the money, but we will be giving the money in the future. That one is account payable for us, because we are responsible to pay the money after 20 days, or we will be giving the money, I think it is worth of 2000. We will be giving the money after 20 days, or after a month. So we have purchased the computer, but the money is not given to CR, but we'll give them after a month. Also we can write here CR, because we have received the computer from CR, so we are accountable to CR. We will be giving the money to CR after a month. That is the fourth transaction. Or on 4th of October we have purchased a computer. Now come to the fifth one. Purchase merchandise for cash Afghanis 5,000. Now we can write this one 5th of October we have purchased the merchandise. Merchandise are those things that we purchase it for resale purpose. If you remember, we have illustrated these terminologies in the previous classes. So we have received merchandise worth of 5,000 Afghanis, but we have given the money as cash to the seller. That one is merchandise against money. So that one is the fifth transaction. Now come to the sixth one. Purchased merchandise on account from the B. Pay attention. Guys, on 5th of October we have purchased merchandise, but we have given the money as cash worth of 5,000 Afghanis. But on 6th of the October we have purchased the merchandise, but the money is not given to the seller on the spot. But we have pledged that we will pay the money after 15 days, for example 15 days, or you are responsible to pay the money in the future. The seller is called by name of Zabi, but we have received merchandise worth of 10,000 Afghanis. Now here we can record 6th of the October we have received merchandise, but will give the money in the future. It means we are responsible, or we are account payable. We are account payable to I think he was Zabi. We will pay the money to Zabi. Yeah, we are responsible to pay the money to Zabi after, for example, 1 month. The amount of the merchandise is 10,000 Afghanis. That is the sixth transaction that we have recorded in journal. Now come to the sixth one. Seventh. Paid transportation charge Afghani 200. So pay attention, we have different types of expenses in organization. So salaries, transportation cost, electricity bills, and also telephone bills are all the types of the expenses. So here we have one of these kinds of expenses, that is transportation charge, and worth of 200 Afghanis. So here we can record that on 7th of the October we have expenses. We can see here, we can write here transportation expenses. Expenses. We have transportation expenses worth of how much? 200, but we have given the money cash. So here we can record that we have 200 Afghanis as expenses in debit column, or it means there is an increase in transportation expenses worth of 200, and also we have decrease in cash worth of 200 because we have given the money as cash. So you can see expenses, or you can see we can completely write expenses. So now come to the sixth one, that is paid salaries to employees cash Afghanis 500. The same expenses we have in organization, but the nature is different. On 7th of the October we had the transportation expenses, and right now on 8th of the October we have I think we had salaries expenses. Yes, we had salaries expenses. We can write here that salaries, or we can record here salary expenses against cash. We have given the money to employees worth of how much? We have 500 Afghanis as a debit, and also 500 Afghanis as a credit. So now come to the ninth one, the sold merchandise for cash Afghanis 7,000. So pay attention. On the 9th of the October we have sold merchandise. Here we have received the merchandise. One was on cash, the second one was on credit. So right now we can say that we have sold the merchandise. If you sell the merchandise against cash or for cash, you will record them cash. So here the merchandise are sold for cash worth of 7,000 Afghanis. So here we can record that we have received cash against what? Against sales of merchandise. You can see, generally you can see sales, or you can write sales of merchandise, but briefly you can write here sales. So we have sold merchandise worth of 7,000, or you can say 7,000 Afghanis are increased uh, in organization. So that one is a debit for the company because it is assets. When we increase assets, it should be recorded as a debit. And also we can write here, or we can record 7,000 Afghanis as credit. Now come to the 10th one, that is sold merchandise on account to Rashad worth of Afghanis 2,000. On 9th of the October we have sold the merchandise, it was for cash. But on the 10th of the October we have sold the merchandise, but it is on account to Rashad. So on 10th of the October we have a merchandise that is sold of merchandise on account. So pay attention, we did not or we have not received the money on the spot, but we will receive the money in the future. The person who has purchased the merchandise from us is responsible to pay the money back to us after a month or after 20 days. So here we can record that we are account receivable, account receivable, account receivable Rishad. We can write the name of the person or the name of the purchaser, the buyer. Account receivable Rishad. Account receivable is assets in organization. When there is increase in assets, we can record them as a debit. Against what? Against sales of merchandise. You can write sales or sales of merchandise. You can also write sales of merchandise. So briefly you can write sales. Worth of how much? I will see it here. Worth of 2,000 Afghanis. Worth of 2,000 Afghanis. 2,000 Afghanis we have in debit side, and also 2,000 Afghanis we have in credit side. Now come to the 11th one, paid cash to the B Afghanis 5,000. What does this transaction mean? Pay attention. If you remember, here we have purchased the merchandise from the B on 6th of the October. Purchase merchandise on account from the B worth of 10,000 Afghanis. And also here on 11th of the October we have paid money to the B worth of 5,000 Afghanis. That is the money that we have received merchandise from the B, but we did not pay the money on that time. Right now we are responsible to pay the money. So come here. On 6th of the October we had this kind of transaction, that merchandise received from the B, but we were responsible to pay the money after, for example, a month or after 3 to 4 days. So right now we can see account payable, because we were responsible to pay the money back to the B. We were account payable. We can write here account payable. We can write the B how much worth of 5,000 against what? Against cash, because we have given cash to the B. From one side we have decreased liabilities. When there is decrease in liability, it should be recorded as a debit side. And also when there is a decrease in cash, it should be recorded as a credit side, because cash is assets in organization. So that is worth of 5,000 Afghanis. Worth of 5,000 Afghanis. It was on 11th of October. 11th of October, paid cash to the B. So now come to the 12th one, that is sold merchandise to Sahel on account. Pay attention. Merchandise are those things that we are purchasing them for resale purpose to receive the profit. So we are purchasing the merchandise and also we are selling the merchandise from our organization in the market. So right now we have a transaction that we have sold the merchandise to Sahel on account worth of 10,000 Afghanis. So pay attention on, we can write here 12th of October. We can write here that we are account receivable because we did not receive the money cashable, but we will receive the money in the future. That is against sales of merchandise. Also, you can write the name of the seller here. That is Sahel. The person is Sahel. You can write the name of uh, the creditor here. So account receivable is worth of 10,000 Afghanis, and also we have 10,000 Afghanis as a credit. Because from one side we are responsible to receive the money in the future, that is account receivable. Account receivable is assets for the organization, and when there is increase in assets, it should be recorded as a debit. And also from the other side we have sold the merchandise, that is sales for the organization. The nature of the sales is the revenue. We will be receiving the revenue in the future, or that is revenue for the organization. When there is decrease in the revenue, it should be recorded as a credit side. So that is account receivable against sales of merchandise but to Sahel. That was 12th of October. Now came to the 13th transaction. On 13th of the October, we have a transaction that merchandise returned by Sahel. Pay attention. Here we have two transactions. One is sold merchandise to Sahel on account. Sahel is responsible to pay the money back to the organization after a specific period of time. But on 13th of the October, we have a transaction that merchandise returned by Sahel worth of 1,000 Afghanis. There should be defects, or there should be some problems in the merchandise, but worth of 1,000 merchandise are returned by Sahel. So we can record this transaction here that it was on credit. Pay attention. If it was on cash, so we could record it as cash against sales to Sahel. But here we can record here sales return from Sahel against what? Against account receivable, because he was responsible to pay the money after a specific period of time. Right now there is a problem in merchandise worth of 1,000. So we can record the sales return worth of 1,000. We can write also worth of 1,000 in credit side. If the transaction was on cash, we could record cash against account receivable. That was 13th of the October. Now come to the 13th one. Received cash from Sahel Afghani 6,000. Pay attention, there are three transactions. On 12th of the October, we had a transaction that sold merchandise to Sahel on account worth of 10,000. On 13th of the October, Sahel returned merchandise worth of 1,000 Afghanis. On 14th of the October, for example, that is an example. On 14th of the October, Sahel has been giving the money back to our organization worth of 6,000 Afghanis. So here we can record that. On 13th of the October, we have received cash from whom? From Sahel. That is, you can write that account receivable Sahel. We have received cash. From one side we have received cash worth of 6,000 Afghanis. From other side the credit on Sahel has been decreased. Both of them are assets for the organization. Both cash and account receivable are assets in organization. From one side we have received worth of 6,000 Afghanis from Sahel. It has been increased in organization. We can record them, it means the cash as debit. From other side we have decrease in account receivable because it is a kind of credit, but the nature of this kind of credit is assets. There is decrease in this kind of assets, so it should be recorded as credit side. So now come to the 15th one. Paid advertisement expenses in cash Afghanis 1000. Advertisement is also expenses for the organization. That's not for 24th, it is 14th. On 15th of the October we have expenses, and these expenses are called by name of advertisement expenses. You can record advertisement, or you can record advertisement expenses. Both of them are the same, so but it is enough to write advertisement against cash. Advertisement against cash. So worth of 1000 is given for the advertisement. So advertisements are expenses for the organization, so where there is increase in expenses, it should be recorded as a debit. And also there is decrease in the assets, and that one is cash. We have given cash against advertisement, that should be recorded as a credit. So that one was the 15th transaction. Now come to the 16th one. Paid fuel expenses Afghanis 500. This is also a kind of expenses in an organization. We can record that we have fuel expenses in organization, and we have cash against this kind of expenses. That is worth of, I think it was 500 here. Worth of 500 is going for the fuel expenses. Fuel worth of 500. These are the expenses in an organization. Fuel expenses we have advertisement expenses, we have salaries expenses, we have rent of the building, also we have electricity expenses, bill of the telephone or telephonic expenses. These are the expenses in organizations, and when they occur we have to record them as credit, because when expenses are increased, or when there is increase in the expenses, it should be recorded as a debit. And also we have given 500 Afghanis cashable against these expenses. So now I've come to the 17th one. Paid salaries in cash Afghanis 2000. On 17th of the October we have salaries expenses. You can record salaries enough, or we have given the salaries to the employees worth of 2000 Afghanis. 2000 Afghanis are given to employees against their services. So sorry, it's not 20,000, that is 2000. And also on 18th of the October we have the last transaction, that is Irfan withdraw cash Afghanis 500 from the business. There is a word by the name of withdraw, that is drawings. The nature of this one is drawings, but that one is expenses, not the expenses for the organization. If you remember, I have illustrated this transaction, I think it was the second lecture at the university. Withdraw is drawing for the business, but this is the expenses for the owner of the business. not the expenses for the organization. If this is expenses for the organization, we can record them for the organization. But here, that one is the expenses or the personal expenses of the owner of the organization. We can record them in a journal. It means the drawings. This transaction should be recorded in journal as expenses. And here you can write that drawings drawing against what? Against cash. It means worth of 500 as Afghanis are given to the owner of the business for his personal expenses. We can record this one in journal. The nature is the expenses, but these expenses or the drawings should not be recorded in income statement. So pay attention. We have income statement. We are recording all the expenses and revenues of the organization in income statement. We are comparing the revenues against the expenses. Drawing is expenses, but it should not be recorded in income statement. It should be recorded in balance sheet in capital, and it should be subtracted from the capital of the owner. So we're recording that there less. We can record that less drawings 500 Afghanis there. So when we are preparing the balance sheet, we will be recording this kind of transaction there in capital. So it was the exercise that we have in our lecture. So only we have recorded the transactions in journal. So here in the question we have required record the above transactions in journal. Second, post them into ledger and prepare a trial balance. So right now we have recorded these transactions in journal. In the next lecture we will be recording them, or we will be posting them into ledger, and after we will be preparing the balance, the trial balance. So if you have the questions at the end of the class, you can ask the questions. Thanks so much. Thanks for your attention. So it was today's lecture.